Be Wealthy and Smart, episode 673.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about bubbles, cycles, and what to do during a stock market correction, because right now, we have one of those going on, and we haven't seen one for quite a while. The stock market has been rising and rising and rising, so it can seem a little scary to people. So we're going to talk about what should you be doing during a correction, what should you be thinking about during a correction, what should you be noticing, monitoring, all of that good stuff. First of all, what is a correction? Well, in jargon, that's a pullback. Or in other words, it's just the market going down for a period of time. About every 6 years, the market goes down by 10%, and every 10 years, it goes down by 20%. Not every decline in a market means that a bear market is coming. These declines are normal and healthy. They get the excesses out of the market. They put fear back in the market, which is actually a good thing because stock markets have to climb a wall of worry. That means you should be feeling scared that the market might not continue to go up in order for it to continue to go up. It's called contrarian thinking, and that's the reality. When you're a good investor, you're a contrarian. You're scared when the market's going up. You're scared it's going to stop. And when you're overconfident that it's going to continue going on forever, that's usually about the time you're going to enter into a bear market. In my book, You're Already a Wealth Heiress, I chronicled that cycles happen on a regular basis. Cycles also occur in the stock market, just like they occur in the 4 seasons. We go from winter to spring to summer to fall, and it repeats. And other things on the planet and in the economy repeat as well. And this was actually discovered after the 1929 stock market crash, when President Hoover commissioned a study to find out the cause of the stock market crash. And it came back that the cause was actually a cycle that repeated every so often. And since that time, top universities, the elite, corporate CEOs have been involved in understanding cycles at a level that the average investor does not. Cycles do reoccur, and at the highest levels of hedge funds and billionaires, institutions, governments, probably even a lot of the people that attended that Davos conference last week, are very aware about cycles. And this was all chronicled in my book if you want to read more about that. Cycles are regular things that happen, and they're not to be feared. And fear and panic are the worst things that an investor can do, because that can cause you to become fearful and sell all of your investments right at the bottom, only to see them rebound and go on to higher highs. So don't try to sell every high and buy every low. You can't. Even professionals can't do it. And how do I know that? Well, Warren Buffett made a bet with a hedge fund manager one time. And he said, you go ahead, do your buying and selling thing, and I'll put my money in a low-fee S&P 500 index fund, and we'll see who does better. Well, you guessed it, holding the S&P 500 index fund did much better than the hedge fund manager trying to sell high and buy low. And in fact, many hedge fund managers right now who manage money for millionaires and billionaires are closing their funds because they have not been able to outperform the S&P 500. And they're supposed to be able to charge high fees because they can get better performance, but they haven't been outperforming the S&P 500 index fund. So anyone who has held the S&P 500 index has done better than the vast majority of high-expense hedge fund managers. Wise investors know long-term buying and holding is the only way to be a successful investor. So, what should you do during a pullback? Number one, understand it's a cycle. It's coming to a point in time where it's time for the market to pull back. These are normal and natural parts of investing. Number two, do look at the reasons being attributed to the pullback. Are they surface and temporary, or are they a fundamental problem? For example, right now we have the coronavirus fear going on right now. Most of that is occurring in China. And yes, a few cases have been found in the US and in other countries. But do we have any reason to believe that companies in the S&P 500, the largest companies in the United States, will somehow have a material difference in their earnings, in their profitability because of the coronavirus? Probably not all of them, maybe some of them, but time will tell, and it's much too early to have any idea what the real impact is going to be. Number three, monitor the situation. Stay aware of what's going on, be informed, but don't panic, and try to keep a level head. Number four, start identifying any bargains you may want. If you've been wanting to buy a certain stock, or if you've been wanting to buy into the S&P 500, but you haven't been able to because the market just kept going up, decide what it is you want to buy if and when you're given a greater opportunity. Number five, consider adding precious metals to your portfolio, either gold, silver, or my favorite mining stocks, the large miners, GDX, or the junior miners, GDXJ, which, by the way, I own all of those things. These can work well as a good hedge in your portfolio, meaning that they often go up when the regular stock market goes down. As we've been following for several years on the podcast, the mining stocks are in an uptrend and have had a spectacular year last year and look to continue that this year. Since bonds are at such low interest rates and don't provide much of a cushion, something like this can be a good alternative as a buffer or a hedge in your portfolio, something that can go up when the stock market goes down. And finally, number six, don't do anything. Just monitor your portfolio, but sit tight. Stay informed, and if your financial advisor isn't educating you and keeping you informed, move your account over to Fidelity and consider joining the VIP experience, where you're going to be regularly informed on a daily, weekly, and monthly basis, and you'll know exactly what's going on and how to look at the chart and understand when we've reached the bottom and when it is most likely safe to get back in, or buy the investments that you've had earmarked to buy at the low. In my research, this pullback isn't going to be a major decline, nor is it going to be a very long one. And hopefully, knowing that can give you some peace of mind. I'm not a fortune teller, but I do connect in with cycles and cycle researchers who have a pretty good handle on this. So stay positive, hang in there, don't panic, and start thinking about what opportunities might present themselves to you. Because I guarantee you, our famous investor, Mr. Warren Buffett, is doing that right now, trying to figure out, with all that cash that he's been storing up, if this is the right time to buy and what bargains he's going to be shopping for. Just like when other things go on sale, pullbacks and stock market corrections offer us the opportunity to buy indexes on sale, our favorite ETFs on sale, our favorite stocks on sale. So turn your thinking around, and instead of feeling fearful, start thinking about what a great buying opportunity this just might provide. If you haven't read my Wealth Heiress book, there is a link in the show notes where you can buy it on Amazon or at any bookstore. If you want to know more about the VIP experience, there's a short questionnaire in the show notes to fill out, and we'll be in touch with you. And if you want to know more about anything to do with personal finance, check out my Wealth Mentoring library of podcasts at lindapjones.com/podcasts. All of my podcasts are there, short and sweet, to the point, that will teach you exactly what it is you want to know and answer your questions. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.